Hello everyone. The topic is Introduction to Financial Management, and we will be learning Introduction to Finance, meaning of finance, definition of finance, types of finance, definition of business finance, definition of financial management, finance function, functions of financial management, and importance of financial management in this presentation. Come, let's see what is finance first of all. As the body needs blood, as the body needs oxygen, the business need something. By far, not only business, people need it as well, and it is used for many purposes. Usually people tell it is the medium of exchange while transacting in business. We call it as money. Money is used for buying and selling of goods. It is not only restricted to this. There is a higher meaning for money which says money is what money does. And as this need for money grows, it keeps on multiplying, and the business needs money, and the business needs money for its starting, expansion, diversification, and modernization as well. And this money is required to the business organization in larger amounts. And this larger amount of money required by companies is called as capital. And a position or a situation or a concept wherein whenever the company needs money, there has to be a system to provide it whenever there is a need, and that system, that criterion, we call as finance. Finance is needed whether it is a big, medium, or smaller organization. To carry on its organization's operations, it needs different levels of money or capital, and providing that whenever it requires is called as finance. Hence, finance is known as lifeblood of an organization or enterprise. So, finance means, in simple terms, it is how the money is required by the business, called as capital, and how it is put into use by the business only for the purpose of business operations, can be termed as finance. The definition of finance goes this way. According to Khan and Jane, finance is the art and science of managing money. Most of us, whether it be individuals or companies, we, as far as money is concerned, know only one thing, that is how to spend money, but very few know how to manage money, and only those who manage money have achieved success in finance or money matters. So, coming to the types of finance, finance is broadly divided into two types: private finance and public finance. If individuals, partnerships, or businesses need finance, and how do they meet their financial requirements, that comes under the category called as private finance. In case if government organizations need money, and how it is being met, all the financial requirements of whether it be the central government, state government, or the governmental bodies, how do they meet their financial requirements comes under the category called as public finance. So there are two types of finance. One is public finance and the other is private finance. The definition of finance goes this way. According to Wheeler, business finance may be defined as that business activity which is concerned with the acquisition and conservation of capital funds in meeting the financial needs and overall objectives of the business enterprise. And according to Gutman and Ergel, business finance may be broadly defined as the activity concerned with the planning, raising, controlling and administering the funds used in the business. So both these definitions clearly says that how money is bought from various sources and how it is being used in the business. That can be termed as business finance. It is always focusing on acquisition, how money is bought, from where it is bought, and how it is being or how it has to be used in business is the focus which defines the business finance. Coming to the definition of financial management, one thing you should know is financial management is far from business finance and it is very far from the word finance. I hope you have understood what is finance and what is business finance. Now let us see what is financial management. According to Solomon, it is concerned with the efficient use of an important economic resource, namely capital funds, in the company. And according to S.C. Kushal, financial management deals with the procurement of funds and their effective utilization in the business. How effectively the funds are being used in the business organization, how effectively it is used and how efficiently it is used is a major focus in financial management. Then how is this effective and efficient usage of finance is being done in the companies or in the business organization? It is through this which is called as finance function. What is this finance function then? Finance function means all the activities or actions performed by the finance department which involves in acquiring and utilizing the funds of a business for efficient and effective usage. All those activities that are performed in concern with the finance department is known as finance function. Now let us see the functions of financial management. First, anticipating the financial needs, whether the company is going to be started, whether the company is going to expand, whether the company is going to diversify, or whether the company is going to modernize its business, it needs capital or finance. And here the finance department has to anticipate what is the amount of capital needed for the company, both put together fixed capital as well as working capital requirements. Once it is done, it has to determine the capital structure and acquiring the financial needs. Here, the company has to decide from what source the company has to bring in the capital that is suitable for the company, whether it has to be from shares, whether it has to be from preference shares, or it has to be from debt or loan market. Once this source has been selected, the next step, the company has to measure the risk that the company is going to take in because of the choice of source of capital that the company has made. And third, it has to calculate the cost of capital. Here, the cost of capital represents both the cost being incurred to raise the capital and the cost of capital the company has to pay for using the capital that is being bought through various sources. That has to be kept in mind, and that is the second function. And the third is all the money that has been bought through various sources and through various all the measurements of the companies, it has to allocate the funds that is available in the business for various projects only for the purpose of earning money. But while allocating, it has to keep in mind the safety, liquidity and profitability of that particular projects for which money is being allocated. And next, once after allocating the funds, the financial management has to watch and supervise the allocated funds whether it is performing as per the objectives of the company or not. If not, there has to be a change made in the financial management activities, that is administering the funds. And next, it has to assess the financial plans. Whenever it has to implement or execute a particular financial plan in the company, the financial management department has to assess all the financial plans and choose the better one, ensuring control from that particular department. And finally, whatever is happening in the company relating to the finance, the company has to report to its higher authorities. The financial management department has to report all the financial performance criteria to the top level management. Thus, financial management is very important. Let us see what is the importance of financial management or aims of finance function. It always plans. Financial planning helps in the company in using the funds in a proper way. What is the amount of fund needed, from where it has to be bought, and how it has to be used can be done legally in a proper way through financial planning. It helps in acquisition of funds, from which source is going to be cheaper and which source is going to be safer with less risk to the company. So it is very important. And third, it helps in proper usage of funds. Financial management gives guidelines and guides the business to use the funds in a proper way, so that will take up better financial decisions. Better financial decisions are always good for the company, for the benefit of the company. If financial decisions are taken in a better way, that will automatically result in the profitable position of the company. It always will improve the profits of the company if the decisions are taken at right time, and a right decision will lead to the profitable position of the company. And next, always the profits of the company will increase the value of the business in the market, and because of which investors will get attracted towards the company and they start investing in the company, and because of which more people will be getting more profit share from the company, and because of which automatically the savings of the individuals investors will increase. Thus, financial management is important, and no company can succeed without the importance of business finance or financial management. So, we learned introduction to finance, meaning of finance, definition of finance, types of finance, definition of business finance, definition of financial management, finance function, functions of financial management, and importance of financial management. For further reading, please go through these books. I hope this presentation gave you little knowledge in understanding the financial management. Thanks for listening.